The big question everybody wants to know is this: has the worst already happened in the markets, or is there still bigger crashes to come? Now, although the Ark Invest ETFs need a good economy to thrive, Cathie Wood still believes we're all headed for a hard landing. A hard landing is not a complete crash, but it is a source of stress, normally through a period of stagnation or recession. And so in this video, we're going to be taking a look at the 3 biggest takeaways from Cathie Wood's monthly market update, including why she believes more economic pain is still to come with a hard landing. Then, with the latest jobs data now in, will the Fed be raising rates again next week, or is a reversal on the cards? And then we'll finish up with the amazing thing that happened that no one predicted, with crypto becoming a flight to safety. And will that trend continue? Okay, so first up, the bulls and the bears have never been more conflicted than they are right now. So why does Cathie Wood believe that a hard economic landing is coming our way?
Now, many of you know we think there's going to be a harder landing out there in the economy than most people expect. The equity market has narrowed in terms of just a few stocks, the mega cap tech stocks accounting for, I think, at 75% of the market's move this year. We would expect, if we're right on our inflation and interest rate call, the market to broaden out. And that will give us more comfort. Narrowing tends to be, if sustained, can be very negative. It means we're setting up for a bear market. We do think we're going into a hard landing, or let's just say a harder landing than most expect. We do think a lot of that is discounted, but it will be uncomfortable enough for companies who are losing pricing power and experiencing margin pressure. It is going to force them to adopt these new technologies faster than otherwise would be the case. Innovation solves problems. It always does. And we believe companies are going to be looking at a major problem, and that is margin degradation that they will want to protect against.
So, with only the mega cap tech stocks accounting for 75% of the gains of the total stock market this year, this is in fact not a good sign. Now, a healthy market is one where several sectors and companies, large, medium, and small, are all growing and doing well. And on the flip side, when it is just one sector and then just a couple of stocks within that sector that's getting the huge gains, this is a red flag. Recently, with AI being front and center, Nvidia has exploded, now up 175% on the year and 30% in just the last month. And then in crypto, it was Pepe, the latest meme coin that saw a 1000% gain in just 1 week. Yowzers. Okay, next up, one thing that can move the market up and down is the Fed and their rate hikes. We all know by now that the Fed's been executing one of the fastest rate hike cycles in history, and their next meeting is next week. So are we going to see another rate hike, or is a reversal coming?
M2 officially now dropped 4.6% on a year-over-year basis in April. And we think that it will continue to accelerate to the downside. We think it'll be down 5% or more in May. So the question now is the Fed going to pause? And we keep getting different stories from different Fed governors and presidents and so forth. If you look at the 2 variables that the Fed has focused us on, employment, and you look at the headline numbers, including today's, you'd say, no way are they going to pause. They're going to keep lifting rates. Employment is too strong. If you look at the details inside today's report, and maybe I will go through that now, you'll see that they may be having second thoughts. While the headline number, non-farm payroll, was up 339,000, I believe. So payroll employment is a survey of corporations. Household employment is a survey of households. And that number was down 310,000, which is pretty shocking to see that kind of a divergence. But it does happen at turning points in the cycle.
So the key date for this month, one for the calendar, is June 13th, where the Fed will be deciding will they raise rates again or pause. The prediction is currently a 75% chance of a pause. As Cathie Wood mentioned, there was conflicting data in this month's job reports. We had the non-farm payroll survey saying hiring increased, but then the household survey saying unemployment increased. So what is going on? Well, when we dig a little deeper, the main difference is that the household survey includes the self-employed, where the non-farm does not. So I guess it would be more accurate. And if you didn't know, the non-farm payroll literally means just that. It excludes people working on a farm. Okay, and to finish up, throughout all the FUD of debt ceilings and recessions and banks going bankrupt, amazingly crypto flipped in the eyes of investors and became a flight to safety.
We have found it very interesting that Bitcoin and crypto generally rallied in the face of a crisis, the regional bank crisis. And that was proof positive to us, at least, that crypto, and especially Bitcoin, and to some extent Ether, have become flight to safety vehicles, much like gold. And in fact, it got us thinking about innovation generally, especially now that AI is becoming so important, top of mind, all corporations now, which means it's going to happen faster than otherwise would have been the case. We think innovation is going to be perceived broadly before all is said and done in this cycle as a flight to safety. It's the opposite of the way investors and others have been perceiving it in the last couple of years. They were looking at innovation in a period when interest rates were going up as a problem in their portfolios, because innovation or any long duration asset is very dependent on interest rates. But if interest rates are going down, then they turn from a headwind into a tailwind.
This month, Cathie Wood is in the camp that more economic pain is coming as she expects a hard landing. On the positive side, she also believes a lot of this has already been discounted by the market. With conflicting job data this month, it does make it more difficult to predict what the Fed is going to do next week, and as it stands, there's only a 25% chance of another rate hike. And as we recently saw with China, businesses are starting to realize that if they don't get involved in these big megatrends like AI and crypto, they too will be missing out on the next generation of gains. So there you are, guys. Hope you enjoyed. So it will be all eyes on the Fed next week, and let me know what you think is going to happen below. But for now, just to say, if you did enjoy anything in the video, then drop a like. A big thank you to everyone who does, and I'll see you in the next video. Bye for now.